Okay, welcome back, everybody. We are back. Quant Bros, episode 6. This one is going to be a lot of fun. We're going to talk a little bit about MicroStrategy, which is everybody's favorite topic. And we're going to get into some of the nitty-gritty with options today. We've got Dan Hillary, who's done a ton of option analysis. He's put out, 60 or 70 videos now about his options play and how he views the options world. We're going to talk about the option landscape for MicroStrategy, start to think through some of the game theory about exercising versus selling the contract and what is a call option. We're going to think through that a little bit and get into Kelly Criterion, talk about MSTY a little bit, and see where the conversation goes. As always, it's going to be a little bit off the cuff. We've talked through some of these topics previously, but we're going to go a little bit in depth into some of them today. So, Dan, we're excited to have you on the Quant Bros today, and welcome.
Thanks so much, guys. Super excited. Definitely have been a 5-episode fan, and can't believe I've made it here. So.
Well, yeah, go ahead, Ryan.
And if I can just chime in on that, I mean, Dan has really done a remarkable job over the past weeks, months, ever since I kind of discovered him on Twitter. I mean, he's posting like very, very thoughtful, insightful, well-researched things that, I myself, I can't keep up with the volume of content that's come out. You know what I mean? There's kind of a turtle and a hare metaphor here between Quant Bros and Dan's output. But yeah, I find myself bookmarking his stuff frequently, going back through it, kind of challenging my own perceptions on like the micro hair-splitting differences of belief that I might have with Dan, and it's a very reflective process. So yeah, Dan, it's a real privilege to have you on.
Thanks so much, Ryan. Yeah, likewise, guys. Like I wouldn't have found this trade if it wasn't for you. I was looking around and I was kind of lost in the weeds, but I personally believe this is probably the biggest trade of our lifetimes, and probably the biggest trade you can make on top of Bitcoin. So super, super excited.
Yeah, it's an exciting place to be. What do they say? Or what's sailors say? Volatility is vitality, right?
Exactly.
It certainly had the ups. It certainly had the downs. I think you could definitely see a lot of emotion looking at people's Twitters following over the last couple of months. Obviously, we've had a lot of volatility with Bitcoin. I guess talking about landscape. In terms of Bitcoin, we are at block 851,470. Today is July 9th. MicroStrategy is trading at $1,301. The multiple on net asset value is 1.76 on the MSTR Tracker. If you go to the MSTR Tracker website, you'll see that over the last couple of weeks, MicroStrategy has actually held up really well relative to the price of Bitcoin. If you look at periods where Bitcoin was also trading in this $55,000 range, the price of MicroStrategy was worth materially less than what it is today. So if you look at the MSTR Tracker website, you will see that it's performing pretty well relative to some of the historical periods. What I think this shows is that the market understands that where Bitcoin has gone recently is temporary. So, this is perfect. Thanks, Ryan. Brought it up. So, right, when you compare to where MicroStrategy has been at some periods in the past, it is performing relatively well relative to Bitcoin. So, a couple of things have happened since our last episode. You've got the Russell rebalance. So, MicroStrategy has shifted out of the Russell 2000 and into the Russell 1000. I think that was probably a net negative share impact on MicroStrategy. I think that the Russell 2000 index is materially larger than the Russell 1000 index. So I think there was probably some volatility around the Russell trade there. And moving forward, there's still quite a few bullish catalysts on the horizon. Thinking about NASDAQ 100, QQQ, MicroStrategy needs to have a $36 billion market cap in order to qualify for QQQ, NASDAQ 100. That's around a $2,100 MicroStrategy price, might be more like $2,000 MicroStrategy price. And then obviously S&P 500 is, I post about it every day. We're 92 days in a row of qualifying for the S&P 500 market cap threshold. The last component necessary is the earnings threshold, which upon FASB accounting adoption, likely, at some point either in the rest of 24 or early 2025, when it's mandated, we will see that earnings impact flow through to the MicroStrategy balance sheet. So a lot of things to be excited about. I don't think there's anything to, if you're looking at MicroStrategy, if you're listening to this episode, you're probably so long or irresponsibly long, right? Like you're thinking long term on this trade, and I think there's a lot of things to be excited about. I think Preston said this the best. It's like trying to jump onto a bullet train. This is a really hard trade to figure out where to start, and it's like jumping onto a bullet train running at full speed, right? Like you might buy at 2,000, and then you write it down to 1,300, and you freak out, and you might sell, and 5 weeks later it's trading at 5,000. You just don't know. Also want to reiterate that none of this is financial advice. This whole episode, everything that we talk about is financial advice. We're going to get into options here. We're not trying to explain to you how to trade options. We're just talking about the option landscape, explaining things a little bit. Anything that Dan says, not financial advice. We are going to go through some visuals today, so if you are listening on a podcast form, it might be helpful to pop on YouTube and check out some of the visuals. We'll try to explain our way through it, but it is a little bit numbers based. So that's where we're at. Ryan, Dan, anything to add on kind of where Bitcoin's at? I know there's been a lot of bearish sentiment from this Mt. Gox or Germany FUD, but I think it'll be short-lived. Yeah,
my only piece to add is I think the past couple of weeks have been just so bullish for MicroStrategy. If you look at the linearization of MicroStrategy NAV multiple based on Bitcoin prices and MicroStrategy share price, like we're still holding above like what has historically been sort of a linear or even exponential trend, which I'll talk about later, in MicroStrategy share price increasing above the Bitcoin rate of increase. Things are looking really, really good.
And just one quick thing about that, Jeff, because you said just kind of general opening thoughts. What do you think about price of Bitcoin? When we talk about, you and I have talked about this before, the seasonality concept of when the typical high point comes as measured by after the halving. So for Bitcoin's first epoch, there was no halving. So starting in the second epoch, from the point of the first halving to the high point was 371 days. And then same thing for the third epoch, it was 525 days. The most recent epoch was 546 days. In our current epoch, where we're at now, we're at 81 days. So we're kind of, we're really in the sweet spot of things, and we're perhaps, 200 or so days away from that. So that's the narrative that I'm focused on. Plus with, the next move in interest rates, this isn't even like a surprise or a controversy. The next move in interest rates is a cut, maybe 2 this year. Because I remember talking about, interest rates being at their peak like a year ago, and people were saying, Max Kaiser talking about 12%, 10-year bond. I mean, it's just nuts to even think about that kind of stuff. So between where we're at in the Bitcoin halving cycle, interest rates, we got M2 going higher. We're in the peak part of the election cycle where the incumbent president has all the incentive to just do stealth QE all over the place, a la forgiving, Medicare debt and, student loan forgiveness, those sorts of things, kind of stealth QE. That's what I focus on. What I don't focus on is like, Germany selling a little bit, or like a Mt. Gox like distribution where this is only my second cycle, got into Bitcoin in 2018, and I feel like I've been hearing, and I'm not like an OG by any means, that's the point there, and I feel like I've been hearing about Mt. Gox distributions for just like cyclically every year or so, it just kind of comes back in. If we think about that contrasted with the buying pressure of MicroStrategy, the ETFs, the Semler Scientifics, and if we end up getting to it, I've got a slide on, and I know I'm rambling here, but I've got a slide on what I believe to be, the top 30 founder-led public companies in America, because I really think that founder-led incentive structure, both on the corporate governance piece and also in literal terms of them being able to make decisions almost unilaterally, that's really like the primary candidate for public companies, not the value stocks that have been around for 100 years. So that's kind of my price trajectory thoughts on Bitcoin, and just kind of opening thoughts about the things that I'm going to talk about. But I think we're going to transition to Dan here. Dan the man, this is his show.
Yeah, I do want to add one more thing there, just about the recent FUD on Twitter. Over particularly the 4th of July weekend. It seemed like everybody freaked out over the 4th of July weekend. There was like $1 billion of Bitcoin that was sold on the 4th of July. I think everybody needs to pause and think about how sick that is. Like, how cool is it that you could sell $1 billion of something on a U.S. public holiday when nothing else is trading in the entire world? Like, if anybody was concerned about liquidity or testing the Bitcoin's liquidity, ability to be liquid, that was an amazing exercise that you can sell $1 billion worth of something in a single day on a U.S. public holiday. Insane. I think that's pretty particularly cool. Now, and thinking about the other players in the market, or Germany or Mt. Gox, I think we'll probably see the funds from Germany, if they really are selling, and it sounds like they are, I would suspect they're probably going to take at least some of those funds and probably diversify, right? I don't know how they hold their Bitcoin right now, but if it's 100% cold storage, self-custody, maybe it's multi-sig or whatever, they probably want to diversify it. And if you want to diversify and buy, maybe have BlackRock hold some of it, you got to sell it to convert to dollars to go buy it from IBIT. So there's in my mind, there could be, and this is in conjunction with the Mt. Gox thing, there could be similar to this GBTC to IBIT trade that happened in February when the ETFs were approved and the price of Bitcoin went down and it blew everybody's mind. We're like, how is this happening? It's like, well, Grayscale is the people that hold GBTC are selling and buying alternative products with lower expense ratios. So I can see this being a diversified play from anybody that is holding Mt. Gox that got totally screwed by an exchange, like not feeling trustworthy of like holding it themselves. And let's just put it on BlackRock to custody it and pay the 25 bips and whatever that may cost in the future. So, if you think about the game theory of what's going on here, one Bitcoin is worth one Bitcoin. And, I think the trajectory, as you pointed out on all these other bullish liquidity type events, I think number go up technology still exists. So, yeah, it's fun stuff. So, Dan, do you want to give a quick intro to the viewers on yourself for those that maybe haven't found you on Twitter yet, but maybe we'll find you on Twitter in the future? Just talk about maybe a little bit of your background or what you've just been focused on your past 70 or 80 episodes, and then we'll get into some content.
Sure, yeah. I'm Dan Hillary. I'm a graduate student at Brown University. I just completed my undergraduate degree there in electrical engineering. And so what I've been focusing on recently over the past couple of videos, obviously all inspired by these two gentlemen here, just doing a fantastic job. And Quant Bros has been just like my rock the past couple months. And I've been looking at really just options trading. And I've been long Bitcoin since I've been investing since I was a teenager. And I lump summed into Bitcoin at 18K per coin, like everything I had. And that's kind of how I got started. And then I've been using leverage loans student loans, you name it, to buy Bitcoin at every dip. And since then, I've been looking for I've spent the past year looking for something. I was trying to look for some sort of return above that of Bitcoin. It's like, okay, the old days have passed where you could do a 20x in Bitcoin. I want something a little more. And I didn't find anything responsible until I found this MicroStrategy trade. And so what I've been looking at are these options positions, mainly because they're quite interesting to me. And then I've done a lot of research on selling options and selling puts, selling calls, covered call strategy, straddle trades. And what I've found is if you want to make money over the next few years and you don't want to just only hold cold storage Bitcoin, a MicroStrategy and a smattering of call options is your best bet. So
yeah, I think I agree with you on that, because I too was looking for the same solution myself. And again, this is not financial advice to anyone to buy MicroStrategy call options right now. But at the time, back in 2023, I was also looking for how do I have a thesis on Bitcoin, it's going to go up. How do I get leverage on Bitcoin without doing anything crazy, and looking at alternative ways to utilize capital in trapped capital sources like 401ks or IRAs, those types of things. So that's
exactly.
That's how I found the MicroStrategy trade, and that's kind of what spurred this whole Quant Bros thing. Anyway, without further ado, let's get into some data. Let's get the quant side of our episode going. I'm going to share my screen, and let me know when you guys see that.
Looks good to me.
Okay, cool. I'm going to close this disclaimer. I'm going to zoom in a little bit just so people can see it when we're on the YouTubes. Okay. So I just tweeted about this, and this is MicroStrategy Option Chain analysis. So the option chain is, and I'll show you guys actually some of the data that goes into it. So for those that are curious, if you're on a podcast, you're not going to see any of this, but this is, just imagine a huge data set with a bunch of numbers and shit on it. This is a data pull of every single strike price of every single MicroStrategy trade at every single expiration date, whether it's a call or a put. And I've kind of manipulated the data to identify whether it's in the money or out of the money. In the money call option is an option where the price of MicroStrategy is trading higher than the strike price of the call option. And just to make this simple, for those that don't know much about options, we'll do a quick basic option overview. A call option, in its basic form, it's kind of transformed over time. In its most basic form, a call option is the option to purchase 100 shares, so every contract represents 100 shares of a specific equity at a specific point in time. So the point in time is the expiration date, and at a specific price. And the specific price that you would buy those 100 shares at that point in time would be the strike price. So in looking at all of the expiration dates of all of the options that are traded for all of MicroStrategy, so this is also known as the derivatives market, because it's a derivative of the underlying shares. In looking at all of the expiration dates, I wanted to identify if there were any particular expiration dates that were lopsided, where there was a significant amount of in-the-money call options that may be a event that we want to look forward to on the horizon. In looking at this data, I identified that the January 17th, 2025 call option expiration date has $758 million of notional value that is in the money from call options in 2025. So this is also the expiration date that I hold, which I'm not surprised. These call options, I believe they were available in September of 2022. So prior to the FTX collapse, I think they were available for about a year and 4 months. So I think there were a lot of people that were taking a bullish position on MicroStrategy after the FTX collapse and all throughout 2023 that were able to purchase these call options with very low strike prices in the like $100, $200, $300, $400 range with an expiration of January 17th, 2025. Given that the price of MicroStrategy is trading at $1,300, if you had a strike price of $500, you would have the option to purchase 100 shares of MicroStrategies at $500, and they would instantly be worth $1,302. How options work is you pay a premium, you pay a nominal fee for that option to exercise at a point in time. The premium, if your option expires out of the money, i.e. if your strike price is above the price at expiration, your option is worthless. So there is a lot of risk associated with call options. They are not for your unsophisticated investor. These are sophisticated trades that are a bit complicated and very mathematical, with a lot of leverage from institutional money that knows a lot more than you do. So these are very tricky trades, but the data is interesting nonetheless. So what does this mean that there's $758 million of in the money notional value in January of 2025? So that means every single open interest. So open interest is a representation of the number of call options that are outstanding at those specific prices. The open interest for January 17th, 2025 for all in the money options multiplied by the profit position that they're in represents $758 million. This, if every single one of those call options that are currently in the money at today's price of $1,300, if every single one of those call options were to exercise, that would represent 1,035,000 shares of every single option that's in the money today. Now, that number grows materially. If the price of Bitcoin goes up and the price of MicroStrategy goes up, there are many other call option expirations with strike prices that would go into the money, and that number would balloon and potentially get materially larger. So I wanted to walk through what this means, and I just wanted to think through all of the call options with a strike price that are $500 and below. So I wanted to think about the deepest in the money options. I think many of us on this call probably agree that MicroStrategy is probably not going back down to $500 again, and these are probably going to, with close to 100% probability, expire within the money. So at a $500 strike and below, there are 5,474 open interest. So there are 5,474 contracts that are outstanding, that are calls that are currently that deep in the money. The weighted average of these call options that are that deep in the money is 333, is the weighted average strike price. The current weighted average bid is $973 per share per option. So $97,000 is the current value, the weighted value of all of these options. So I got a lot of flack on Twitter that everybody's just going to trade these. Like, everybody's just going to trade these options. But I really disagree that everybody's going to trade these options. And I think anybody that's this deep in the money on this trade has probably thought about the long-term value of holding MicroStrategy for the next decade and seeing this as a once-in-a-lifetime opportunity to acquire MicroStrategy under $1,000, let alone under $500. So I think many of the people holding this trade, myself included, are thinking through, what is the value of this company long term? Where do I expect it to be? And do I want to hold this for the long term? And there are, with where these are priced, I think there's a high likelihood that the people that are holding these options may sell some in order to generate enough revenue to purchase or exercise the remaining options that they may be holding. So in my math that I've got outlined here, if people were to just take this strategy of selling some to buy some, you can sell one call option at today's prices. You could sell one call option and exercise 2.5. So in exercising call options, and Dan, feel free to chime in here and add anything here. In exercising call options, exercising a call option is not a taxable event. So if you buy the shares, if you exercise your right to buy the shares, that is not a taxable event. And your cost basis starts over, the clock of the cost basis starts over when you do exercise the shares. So if you had a $500 strike price, your cost basis is $500, but it restarts the clock from whenever you exercised.
Yeah, and this was a fundamental misunderstanding I had. I thought exercising calls incurred a short-term capital gains taxable event, which it doesn't. And so it's super, super appealing to an investor who wants these shares. It's almost like if you hold these deep in the money calls, and you want to exercise them and you have enough capital to do so, there's absolutely no reason you wouldn't, simply because if you sell them and you've held them for longer than a year, you'd incur the long-term capital gains. But if you exercise them, you now just hold the equity and you can choose to sell at a long-term capital gains rate sometime in the future. So you're essentially delaying this taxable event while owning the underlying you had confidence in the first place. And so that, I think, just speaks to Jeff's point.
And right, most other equities are not like this. I think in most any other equity where there are people that are taking long positions, they may roll their options forward. Many other equities don't have this type of volatility, and they may roll their options where they sell the $400 strike, generate profit, and they just continue the leverage game. And then they buy a further dated option that's at a different strike price further down the road. And they just continually do this, taking a long bullish position over a long-term horizon. Now, this trade is very different, where there's incentive to hold the shares and not necessarily play this carry trade forever, given that if there's a big exercise volume at this strike price as well, that could initiate even more pressure on the MicroStrategy trade, given that market makers would have to go find the shares if they didn't already own them.
Yeah, and one other element of that, or go ahead, Ryan, go ahead.
No, you go. I'll go after.
Okay. And one element of that, I think, is the Bitcoin cycles themselves too. You don't want to be caught riding the backside of a potential cycle, whether or not you believe cycles will continue. You don't want to be caught holding out of the money or even kind of in the money call options on the back of a cycle necessarily. So I think a lot of people will look to exercise and hold spot MSTR as opposed to these speculative to the upside investments when we're at a point in time where historically Bitcoin's beginning to make its peak, which is, between 1 year and 527 days after the halving.
Yeah, and as we've seen, is that the premiums on these options are huge, right? They're enormous. So let's say you do make this trade and you do exercise and you're sitting in the backside of a cycle, you can sell covered call options on the backside of the cycle until the dogs come home, and just continue to generate revenue on your spot shares that you hold as a result of exercising, if you're continuing to hold for the long term. So there's ability to generate a yield off the spot holdings where you wouldn't necessarily be generating a yield or a continuous cash flow yield off of holding the option or the long term call.
Do you mind if I hop in here? Perhaps I can be a fun kind of contrarian devil's advocate for the other side. Full disclosure, I'm the kind of person who would be, the type to just simply trade the option as a trading instrument. But I also totally understand the world that Jeff is describing, where it could be an increased illiquidity risk at the event that like more and more people like want to exercise. But me personally, if I'm buying like leap calls in something, I'm also going to own the underlying stock. So I don't necessarily need to use the option in its literal like definition form because I'm already massively long the stock. I want this as something that I can realize like a large sum of gains as like leverage on top of the underlying equity trade. So that's just kind of like my disclaimer and like where I'm coming from. But now with this contract that we've been talking about, what is the incentive for you or for someone else who's in this trade, the January 17 of 2025s? What's the incentive to keep holding it like towards expiration? Because of course, as you guys know, things get a lot crazier the closer and closer you get to expiration. The theta picks up very intensely, and like moves can be magnified just by virtue of the fact that there's not much time left on the contract, versus at the point in which you buy a leap call option with 2 or 3 years till expiration, you're not going to be moving around as much. So what's the incentive to keep holding? Like, why not exercise now or last month or the month before?
Well, I'll start. Dan, feel free to pop in at any point. I think because every single Bitcoin catalyst that you mentioned earlier in the episode, with potential interest rate cuts, you've got an election, you've got you've got a candidate that is literally mentioning Bitcoin and Bitcoin mining and using Bitcoin making Bitcoin in America via mining. And you've got all of these positive liquidity catalysts on the horizon. And then you've got QQQ potential in December. So you've got this potential index inclusion in December if the market cap is over 36 billion, which per the past Quant Bros episodes, that's a lot of liquidity. That's a lot of future buyers potentially of MicroStrategy that may come into play here. And then thinking about the long term of S&P inclusion as well, again, the long-term thesis is you're better off holding this stock or spot this stock than selling into the passive strength that may come from the S&P 500 if you're looking on a decade-long horizon and thinking Bitcoin's going to go up forever. So if your underlying Bitcoin's going up forever, and if the company can, generate a yield off of Bitcoin at some point in the future, which is very likely, this is an incredible long-term trade. But you're right. I mean, it could be super volatile. But if you're already plus 160% in the money, if you're holding $500 strikes and the price is trading at $1,300 and you're plus 160% in the money, if it goes to 5,000, your incentive is to hold on to it longer than not.
Yeah, you're totally right. And for deep in the money options, there's like the time decay actually isn't that great at all. Like you can calculate the intrinsic value of the option. So right now, those $500 calls are intrinsically worth $1,300, the current price of MicroStrategy, minus $500, the strike price. Then you multiply that by 100 shares. And so right now they're intrinsically worth about $80,000. And so any premium, whatever they're trading for now above that, represents a time premium or like a volatility premium, which are represented by option Greeks. So you're really only risking losing that small premium. And it seems like in Jeff's case, like why would that premium so small compared to what potentially could be a doubling or tripling in MicroStrategy price, which will make him hundreds of thousands of dollars per option, simply via MicroStrategy price appreciation. So yeah, it seems like you would definitely hold till expiry on those.
If I can just hop in with one thing, I see your point, good sir, but if I may raise you, the deepest in the money, if I may, perhaps, yeah. The deepest in the money call options for any underlying security will have the highest implied volatility because there is like the most, notional value to be lost there. You know what I mean? And it's like, And this is where we get into the back and forth of like the person who never touches options never has to worry about any of this stuff, right? Like if someone is just owning MSTR, the underlying stock for the long term, and they're bullish on all the catalysts and they want to own it, they don't have to care about this stuff, and they are able to weather a big like shock in price, such as getting cut in half in like a month or something like that. Like it just doesn't matter. But if you get cut in half in the month, like in right around your expiration time, things start to get a little dicey there.
Yeah,
That makes sense.
no, it's definitely a risk. But I think even then, looking at the bullish catalysts on the horizon, thinking about people understanding where MicroStrategy sits in relation to potentially entering the S&P 500, QQQ, the passive strength that's going to be on the horizon. People learning about FASB, right? Like, still, I know we shouted about FASB like in March or April. The whole world doesn't know it exists, right? Like, we are the 0.01% that is yelling about it on Twitter. Nobody knows that this is a thing. And I think it may become a little bit more of a thing when you see if Dell adds Bitcoin to their balance sheet, or if there's a dozen companies over the next 2 or 3 quarters that are adding Bitcoin to their balance sheet. And they're like, wait, why does that work? It's like, well, I'm adopting this new accounting rule that enables to flow it through the net income. I think a lot of people's heads are going to turn.
Can I touch on that real quick? And I know
Yeah.
I really want to get to Dan stuff, so I'm not going to try and make this a big piece or anything, but to unpack the FASB nuance a little bit. Number one, I got it wrong. And I'm saying I, not we. I'm not like pulling other people into that collective, but like I got it wrong. I thought the writing on the wall with, the earnings call at MSTR World, which that's something else we have to unpack, hopefully on a Spaces, but with the earnings call being at MSTR World, the pioneer company for Bitcoin adoption, like he himself being Saylor was kind of, leading the petition movement to push towards FASB Fair Value. That and some other smaller pieces kind of painted a picture in which it seemed like, all right, it seems like they're going to do it this quarter. I was wrong about that. So now moving forward with what we have, just to touch briefly on this whole like kind of speculative idea still, and I wish we had Nathan C. Parry on here to kind of like defend his case, because I feel like me and him are like button heads on this in like a very friendly way. But if there was some tax implication, meaning we would have to have cash on hand to pay an upcoming tax bill no later than, and this is the good thing about timing, is we know the end date. It's Q1 of 2025. They're going to have to, make the accounting switch to FASB Fair Value. I lost my... so we know the end date. And if there's like a cash payment needed to settle a tax bill or something like that, then why would we have just recently, done another round of convertible notes and bought, $500-600 million worth of Bitcoin? Like, that doesn't exactly make sense. And again, the clarifying point, and I'm about to pass it back, is that like I still to this day don't know why we did not make the switch to FASB Fair Value. And I was at MSTR World, and believe you me, this conversation was circulating well. Yeah. I still don't know why we didn't do it, but it doesn't seem like a future tax implication with a cash balance needed to cover it is the reason, because then why would we have just recently bought more?
Yeah. I have some
Actually,
this. Oh, go ahead, Dan.
Yeah.
Go ahead. Let it rip.
Yeah. I did some. So, do you mind if I share my screen really quickly here?
Go for it.
I did a little research into the 10Q recently on the FASB, and there seemed to be some carry forward tax incentives, and I don't know exactly how they'll work out, but as you can see in the 10Q report, and it's a little difficult to see in this slide, but when at the beginning of the quarter, when MicroStrategy did that big lump sum purchase of Bitcoin, with the current accounting regime, they're able to write off the digital asset impairment of their Bitcoin against their net income, which registers as a huge net loss on their income sheet. And this is accounted for as a benefit from income tax here, which is about 160 million for the first quarter of 2024. And then you can see on their 10K annual report, they have about $757 million worth of deferred tax assets as a result of this current FASB accounting regime. Because every quarter when they buy Bitcoin and the price of those assets goes down, they can write it off against their net income statement and defer it forward as a future tax write-off. And I don't know exactly what it could be used for or what sort of could it offset future net income. But the point being is when they adopt that FASB fair value accounting, these tax assets no longer will be present simply because the increase in their current Bitcoin holdings per quarter will offset this net loss. So maybe that could be one of the reasons they have continued to hold on to it.
Yeah, it's almost like they're milking it. It's like
I think so.
You can milk it. You can milk it just by design, and I've thought about this a lot. It's really rarely does a company have a single lever that would allow them to be included in the S&P 500. And I know I focus on the S&P 500 a lot, but this is like it's a huge deal. It's like making the big leagues for corporations. And you get one shot at it, right? Like once you're in it, you rarely fall out of it and you go back in. So you got one shot at it. And if you get included with a higher market cap, there's incentive to try to get your market cap as high as humanly possible before you get included in the S&P 500, because that increases the amount of capital that gets allocated to your stock from passive investors, which just insinuates this cycle of financial strength to be able to do whatever you want in the future. So any company that gets added to the S&P 500 has another level of financial strength greater than companies that are not in the S&P 500, just because they have the stability of the passive flows coming into their stock. So they have this incentive. They have a single lever that they could pull at a point in time to get included in the S&P 500. And in this instance, it makes sense to wait as long as possible until 2025 to get the potential QQQ inclusion in December, so the value of the company at November 30th and getting included in December, and delay that S&P potential inclusion until 2025 with all of the bullish catalysts of Bitcoin on the horizon, and then the potential passive investment from that front. And then you add what Dan just pointed out on milking this tax deferred asset, which is fascinating. I'm not an accounting guy. I'm a bit of a finance guy. I know the accounting, but man, it's really interesting. I know Nathan Perry's topic is the corporate alternative minimum tax that came up with the Biden regime as a result of the Inflation Reduction Act or something like that. It's like if you have $1 billion net income or above, you have to pay this corporate alternative minimum tax, which is 15%. There is some uncertainty on whether unrealized gains account for the corporate alternative minimum tax. In my mind, it would be unconstitutional to tax unrealized gains, and it would be a financial meltdown scenario, because you have all of these other financial structured companies like insurance companies that hold and carry significant assets on their balance sheet and have massive unrealized gains that they would have to start paying an alternative minimum tax on as well. And it's already been ruled, or there's been clarity provided by whoever the accounting board is, that insurance companies are not required to pay a CAMT on their unrealized gains for the alternative minimum tax. So I'm not particularly concerned about the corporate alternative minimum tax. I think that would be insane, and thinking about a potential regime change in November, I think that might go away, or at least the bubbling thoughts of a potential alternative minimum tax impact on net income on Bitcoin holdings. Anyway, I've talked way too much. Dan, I'm going to kick it over to you. We're excited to have you. Let's go through some of the topics that you wanted to discuss, and let's have some fun with it.
Okay, awesome. Can you guys, is this good? It's coming through full screen here.
I can see it. Let it rip.
Awesome. We just talked about FASB. I ran through some volatility calculations just to see if you could sell covered calls profitably over a certain time periods, and I'm going to go over this in more detail moving forward. But what I want to talk about is this sort of exponential argument for MSTR over an increase in Bitcoin price. And as you can see here, I think we all use MSTR Tracker way too much when we're getting excited about the price, or I do at least. And so let's forecast out.
Yeah.
Yeah, he's the man. So there's this like linearization versus exponential increase of MicroStrategy NAV premium over Bitcoin. And so what I did was I looked at all the days in which, all the days over the past year. And obviously we know that MicroStrategy has increased significantly more than Bitcoin. It's outperformed Bitcoin. And so what this pie chart represents is all the trading days. So that about 252 trading days of the year, where 31% of the time both moved positively together, Bitcoin and MicroStrategy that is, and then 33% of the days both moved negatively together. And then in these two categories are a negative move in MicroStrategy and a positive move in Bitcoin during that trading day, and similarly the reverse. So what I was looking for was like, is there some sort of edge? Is it actually the case? And obviously it is to some degree, but I wanted to like quantify it, kind of like how much is MicroStrategy increasing per day relative to Bitcoin, and try to find like kind of an expected value or something. So what you can see here is this is the average outperformance of MicroStrategy. This 1.67% is the average outperformance of MicroStrategy relative to Bitcoin on days when they move together. When they move together in a negative direction, MicroStrategy tends to underperform Bitcoin or outperform it in a negative direction by 1.5%. This is all data from the past year. And similarly, when MSTR moves negatively and Bitcoin moves positively, MSTR is losing 4% relative to Bitcoin. And when MSTR is positive and Bitcoin's negative, it's moving 4.19% positively. What this is kind of trying to show is that there's clearly an edge, and that's reflected in MicroStrategy outperformance. But MicroStrategy is outperforming Bitcoin by about 0.156% every day relative to the Bitcoin moves. And so what that would mean is that would lead to exponential growth relative to the increase in price of Bitcoin. And obviously this won't continue forever, but it was just something I noticed is if this continues, there's an exponential relationship between MSTR price and the increase of Bitcoin price. And so you can't really write off this crazy exponential curve here whatsoever. It's how Bitcoin or MicroStrategy has been behaving relative to Bitcoin over the past year.
Wow, this is that is an impressive visual, oddly symmetrical,
Yeah.
in the days where they followed each other, and then the days where there's deviation. That's interesting.
Yeah, it seems weird that it all kind of it's quite symmetric. Exactly. I don't know what the reason for that is. You'd have to look at like Bitcoin's performance, like what percentage of updates does it have versus down days, but it seems it's pretty symmetric.
Yeah.
And this is only a year's worth of data, so you can't draw any crazy conclusions.
Right. Still interesting. I like how you presented it.
And this is just the average Bitcoin amplitude of movement. So what I was trying to show is, okay, on days when MicroStrategy and Bitcoin move together, how big was the underlying Bitcoin movement? And similarly, on days when MicroStrategy and Bitcoin moved opposite each other, what was the underlying amplitude of the Bitcoin movement? And so when they move together, it tends to be on bigger moves in Bitcoin versus when they move opposite each other, it's a smaller move in Bitcoin. And the average move together is 2.23%, a daily change in Bitcoin price. And when they move opposite, it's a 1.68%, which is good too. And if there's an edge, if MicroStrategy is outperforming Bitcoin every time Bitcoin moves up, and on days when Bitcoin moves up a ton, MicroStrategy moves up even more and tends to move with Bitcoin, that's fantastic. That's what we want. That's all good news.
Yeah, it seems that when there are periods where there's big gaps up, MicroStrategy gaps up even higher. And
Exactly.
It's been surprising where on days when there's big gaps down, MicroStrategy hasn't had the same volatility potentially to the downside. And that's probably a little bit of recency bias, but I think given that there's, passive money going into MicroStrategy without thinking about it, and there's passive money going into Bitcoin too without thinking about it, right? All of the hodlers that are DCAing, but you have people that are buying MicroStrategy that don't even know it. Go ahead, Ryan.
Can I hop in here? Yeah, I really appreciate the way you've laid this out, Dan, because this is a lot of the research that I've been doing and kind of comparing risk-adjusted return numbers for MicroStrategy versus Bitcoin versus the other basket of assets, S&P 500, bonds, gold, oil, things like that. So you have like a actual comparison. I have kind of an interesting data question for you. How do you work through the data issue of having, Bitcoin has a price every day. MicroStrategy does not have an open, high, low, close every day the way that Bitcoin does. So do you just remove the weekends? Is that something that gets accounted for? And this is going to be something we're going to have to be dealing with, perhaps forever. I don't know. Jeff is kind of bullish on the tokenization and 24-hour trading stuff. I both don't want that to happen, and I just don't see it happening. I think the 9 to 4, rhythm is going to kind of keep going on. How do you work through the data issue between Bitcoin every day, MSTR, no weekends and holidays?
Sure. I just look at the 252 trading days of the year, and I compare the open to close in MicroStrategy to the day beginning, so right after midnight Bitcoin price to right before midnight price. So I don't use the open time for Bitcoin. I don't use 9 a.m. Bitcoin price. I use the Bitcoin price at the start of that day. And then I don't account for weekends. I think an interesting way to do it was somehow you could just roll the weekend into the Monday. You could pair the MicroStrategy Monday open close versus the Sunday 01 a.m. to Monday 11:59 p.m. That would be another way to do it.
And then just real quick to wrap this up, don't get me wrong, I still think all of what you've showed on the pie chart, I think it's all directionally true. You know what I mean? Kind of simply because 5 days of the week out of 7 days of the week is a pretty strong majority. So it's going to, kind of generally give you what the real quote unquote real data terms could be. But yeah, it's just going to be this wonky, almost like an accounting issue, right? How the times and dates don't match up. How do we account for the weekend gains? Because I feel like I've seen a ton of Sundays over the years where Bitcoin really just rallied through Sunday night. So yeah, it's interesting.
Yeah, lumping it into Monday I think would be interesting. I'll probably get around to doing that.
You could also use IBIT or an ETF as a
that's a good point.
As a proxy, because that's gonna move directionally the same. It's gonna capture your Monday, or it's gonna capture your weekend on a Monday and have a similar trading comparison. But
yeah, it's a really good idea.
But there's an expense ratio associated with that. I think the other interesting chart to look at is the performance of BITU, so the leveraged Bitcoin proxy. I think it's 2x Bitcoin relative to MicroStrategy. I think BITU started trading in April. I think really when MicroStrategy was pretty high relative to the multiple on net asset value. So even at that time period, I think MicroStrategy is materially outperforming from April to kind of where we are today. I think both negative, but materially outperforming. Interesting.
Yeah, it's really interesting. Anything else, guys, before I move on to the next one?
I'll let it rip.
Okay. So this is Kelly Criterion, and it's something that Fred Krueger talks about a lot, and it's an interesting mathematical formula. And some people try to apply it to Bitcoin and the power law, and maybe holding a certain portion of your wealth in Bitcoin. And what it was created was it's like a gambling formula, and it shows you what fraction of your bankroll you should place on a certain bet knowing the probability that you either make the bet or don't make the bet, and the payoff structure if you are wrong, if you lose the bet, or the payoff structure if you're right. And so you kind of have to use a binary outcome scenario. And in my case, I like to apply it to MicroStrategy leaps because they're pretty close to a binary outcome scenario. Either you make a certain amount of money or you lose it all. And that's not really the case because those leaps will, if you sell them before the expiry date and they're out of the money, they might lose 80% of their value. Or you don't know what necessarily the price of MicroStrategy will be at the expiration date. So there's so many factors, but it's just a useful mental exercise based on certain probabilities that I will assign here. And this is the formula itself. So the F star represents the fraction of your bankroll you should place on a certain bet. P is the probability the investment increases in value. So L is the fraction that you lose. And then this is the win-loss probability. This is the win-loss ratio. And I'll go over all this in my actual calculations in a second. So again, you're just using math to figure out a proper allocation on a certain bet. And the way I look at it is Bitcoin is kind of the US dollar, right? Bitcoin, we believe, is a safe haven and how we store our money. So what kind of risk on bet are you taking and detracting from your Bitcoin stack? So this one's a bit zoomed out, but I'll show you the actual conditions I set forth in this kind of simulation. So what I say is there's a 50% probability that MSTR hits $7,500 per share in September of 2025. And that would put it at a 3x NAV multiple with 190K Bitcoin. So you can assign different probabilities and different outcomes. But what I'm using for the sake of this simulation is a 50% probability that MSTR goes to $750,000 per share, and a 50% probability that in September of 2025, the price of MSTR is below $3,800. And so this applies to the strikes I'm purchasing, which are $3,800 strike calls dated for January 26, 2026, which right now trade for $20,000. So if MicroStrategy goes to $7,500 per share in September of 2025, these calls will be worth intrinsically $370,000, which represents about an 18.5x cash on cash return for the money you put into the call. So this is the payout structure here. Either you make $370,000 or an 18.5x multiple on your money, or what I say here is you lose 80% of your $20,000 and simply that 20% you keep just based on a time decay premium. And when you apply it to the Kelly criterion, again, there's a 50% probability that either MicroStrategy is at 7,500 or you lose 80% of the value of your call. The Kelly criterion spits out a percentage of 60% of your portfolio. So if you believe the probabilities I assign here to be somewhat accurate, and I consider them extremely conservative, then the Kelly criterion would suggest a 60% allocation in MicroStrategy leaps, which would be, which is crazy, which is huge. And that would be the starting percentage, not the percentage after your portfolio has grown, such as Jeff's fantastic $500 strike leaps.
Yeah, well, this is really interesting. I think I'm going to put this into perspective for some people that are listening. $7,500 MicroStrategy price would represent $132 billion market cap. So that would be about the 70th largest U.S. trading company by market cap in the entire market. And I think you used a 3 times NAV multiple with a Bitcoin price of what?
190K.
190,000 in September of next year. So yeah, it's crazy to conceptualize that, but I think I do agree with you in that in that possible probability. I guess my question to you is there a way to simulate this with different probability assumptions across different value different probabilities and different outcomes, or is there a need to assign this across different probabilities or different outcomes, or is it best to do this kind of 50% probability methodology that you've used here?
Yeah, I created like a little sheet where you can do all that stuff. You can change the probability assignments. You can change it's a binary outcome. Either it's in the money or out of the money, but maybe you can even switch it such that like they're both in the money. But regardless, like this is the most conservative kind of model I could think of, like realistically, and it's still showing just a crazy high allocation and leaps. And I just use this to demonstrate, like I don't think most people could stomach throwing 60% of their net worth into MSTR, the highest strike MSTR leaps. Like that's a crazy move, right? Like that's psychotic for any sort of traditional financial, from any traditional financial perspective. So what I'm just trying to show is that like you can put your foot on the gas a little bit.
Yeah, mathematically, taking a probabilistic approach, it still makes sense to have an allocation to MicroStrategy leaves based on the math that you've shown. Now, where this gets wonky, right, is everybody in the entire market has a completely fundamental different view of the probability associations with every one of these MicroStrategy prices and Bitcoin prices and the multiple
exactly
asset values. So that like it's like almost religious at this point on where you think it's going to go relative to the price of Bitcoin, relative to net asset value, and all of these other things. So, this is one way to view, taking a leap position.
Yeah, exactly. And like it all depends on the probabilities themselves. So if you're wrong about the probabilities, if your probabilities are exaggerated, or even if they're conservative, then your whole model's off. So you just have to mentally check for yourself. Like, do you agree with what I'm saying? And if you agree with the probabilities I assigned, then maybe this model could help guide me.
Right. And the concept of it being binary is so true, right? It's it's almost like, what is it? I don't know. It's like balancing something on a knife's edge, right? Where the difference between 7,500, a 10% increase in the strike price at 7,500 is a $750 increase in price. Yeah. We've seen MicroStrategy go up like 20% in a day, and this is how a crowded trade can move and how it can get really lopsided really quick. And there's this nominal bias component of the price of the stock trading so high, where it's going to blow people's minds. If they don't do a stock split and this continues to go relatively high, it's going to be hard to conceptualize. Like, people don't think in exponentials and how things move like this. I mean, compare NVIDIA today. I don't know what they're up today, but I think the price went from like 135 down to 120. Or 135 down to 125, and that move was like a $200 billion market cap move.
Yeah, exactly.
It's just like
well, that's what you always say, market cap synthetic. Like, at the end of the day, the market cap's made at the margin. And if people are piling into this MicroStrategy trade and there's a super low float and these options holders are exercising, it will make a 20% move in a day, and then it'll make another 20% move in a day. And then if you're holding these leaps, you just made $200,000 in 2 days on one of your leaps, and things get out of hand quite quickly.
Yeah. It's a crazy trade in general, right? If you think about, Dan, I'm sure you deal with this a lot. You probably get the haters that say, just buy Bitcoin in cold storage and hold Bitcoin in cold storage, and don't deal with this. And there's definitely things to be said about buying Bitcoin and holding Bitcoin in cold storage. But if you have trapped collateral in other alternative tax advantaged vehicles, this is a way where you could earn a yield on a Bitcoin proxy, right? If you take a covered call strategy on owning spot in the future. If you have 100 shares, you can take a covered call strategy to owning spot in the future. And that's something that right now Bitcoin doesn't currently have, but it's something that it may have in the future.
Yeah, 100%.
Go ahead.
And okay, so the next Topic I wanted to cover was selling naked puts, and Ryan, or Jeff, that was something you mentioned being interested in, and it was something I was interested in too. It's like, okay, can you maybe instead of DCAing in, can you just hold a stack of cash and then sell naked puts, and just when you're assigned the shares, buy the shares and just continue forward? Or, maybe in a sidewards market, could you sell naked puts if you're holding cash and potentially get a yield? And I'll talk about covered calls in a second, but naked puts they're a way to underperform in bull markets and to go completely broke in bear markets. And in sideways markets, you're also underperforming. So it's really not the strategy. Maybe you could strategically do it based on certain weeks, but what I did here was I ran a simulation over the past 4 years.
Real quick. Naked puts, selling naked puts, what this means is selling a naked put is a bullish position. You are selling the option to somebody that's taking a bearish position on MicroStrategy. If they are right, you need to deliver the shares at the point of exercise for the strike price associated with that. As a seller, as an option seller, you are generating a premium. So you are generating revenue by selling naked puts. So for example, I think there are some naked puts out on MicroStrategy right now that are paying like $30,000 or $40,000. So like if you take an out of the money naked put option, you could generate almost enough revenue to buy a Bitcoin with it. So that was the interesting strategy to me, but go ahead, walk through it. It's definitely a very dangerous, it's a very risky position, but go ahead.
No, and I don't mean to say that in any way, like saying it's a silly thing. It's something I've thought about all the time as well. And thank you for clarifying what a naked put is as well. So you have to own, like right now, if you were to sell a naked put on MicroStrategy is trading at $1,300 a share. You'd have to own the cash equivalent of 100 shares of MicroStrategy at $1,300 a share. Or sorry, you'd have to own the cash equivalent of the strike you're selling, the put strike you're selling. So in my little scenario here, I used the current percentage yield on selling 2 week to expiry 10% out of the money naked puts. So for reference, like right now, MicroStrategy is trading at $1,300 a share. A 10% out of the money put would be a strike price of $1,170. And I looked at the price on Monday, and if you were to sell this put to someone holding the cash equivalent, you'd have to hold $117,000 of cash, and you'd be selling these 10% out of money puts on MicroStrategy looking to get a yield. And the 2 week yield on a 10% out of the money put is 1.9%. So again, if on Monday, I sold, Monday being yesterday, July 8th, I sold a 10% out of the money naked put, and it expired worthless. So MicroStrategy ended next week above $1,170 a share, I would receive a 1.9% premium. I would pocket it and move forward. So what I'm comparing that to is owning spot MSTR during different times in the market. As you can see here, the 3 different segments. And obviously the price of MicroStrategy during those times was different. So what I used as a model was a 1.9% yield selling naked puts dated for 2 weeks to expiry that are 10% out of the money for each 2 week interval over these different time periods. And that's what these little dots represent. So this is this is the first week after MicroStrategy adopted their Bitcoin strategy, which I think was in August of 2020. And if you were to sell a naked put that week, it would have expired. That was 10% out of the money. It would have expired worthless, and you would have received a 1.9% premium on your cash holdings. This would have continued on for all of these weeks, all of these 2 week intervals, until this week here in what is this? I think it's in March, in March of of 2021, where you would have MicroStrategy dropped in price significantly, and you would have taken a 6.5% hit on your cash portfolio. What this would have meant would be you're holding cash, MicroStrategy price decreases past your 10% sold strike price, and you now have to purchase the MicroStrategy shares at a premium to what they're currently trading at in the market. All this is supposed to illustrate is that you can add up these weekly returns, subtract out the negative weekly returns, and get your cumulative return over that period. And you would have substantially underperformed MSTR, which did about a 400% return over that same time period. So again, a naked put is a bullish strategy, and you would have significantly underperformed just holding spot MSTR. In the bear market, you would have gotten completely destroyed considering it's a bullish strategy, and this is a bear market. You can see here I use the same schema of 2-week to expiry options, and these are the percentage losses on your cash stack per 2-week interval. And finally, I did this on a chop market, which was November 2022 through January 2024, and it's similar to the bull market. You would have had quite a few successful weeks, but any significant drop in MicroStrategy, which is a highly volatile stock, would have completely wrecked your cash holdings, and you would have significantly underperformed MSTR, which did about a 300% return over this 18-month period.
So, yeah, selling naked puts in those scenarios, or the way that you have it outlined, is definitely a risky trade. Probably doesn't make sense. I think
and maybe it could. Yeah, you're right. Maybe it could. Like maybe you could do 1 week. Maybe you could. There's certain weeks where it's more likely that MicroStrategy doesn't make a big move down. Like there's so many different scenarios. This is just kind of like a selling puts most basic strategy and what mindlessly.
Yeah. Hear me out. This is again not financial advice. Upcoming bull market, a covered leap naked, or a covered put, selling a covered put option leap.
A covered put option leap.
Covered put option leap, and that's what I was particularly interested in. And so I'm looking at it.
That's right interesting.
Just for proxy's sake, right? A $3,800 put for January 17, 2025. The premium associated with that right now is $250,000. So if you held 100 shares of MicroStrategy and you sold a put option with a $3,800 strike, you would generate $250,000 of revenue. It would be covered, right? You'd have 100 shares of the underlying, and you're taking a bullish strategy. And then you could take that revenue and buy Bitcoin with it. And that's taking a double. It's taking a double risky position, because then you're also taking a bet on Bitcoin as well. You could get your shares called away, and you're like, if the price of Bitcoin goes down, then I guess you would just get your shares called away.
This is something I've been thinking about. So you're selling you're selling the put. I got you.
So a covered.
And can you do that? Can you cover the put owning shares?
Yeah, it's a covered put instead of a covered call.
Okay, gotcha.
It's an interesting thought concept, right? The premiums paid on these put options are massive.
Yeah.
Jeff, couple questions for you on that, and I don't know if I'm coming in laggy or not, but how far out of the money would you be selling, and what was the price of that contract? Because then the investor, of course, has to do the math about, for every contract you have to have 100 shares to make this a covered put, which is kind of
that's what I was saying.
I don't think I've ever heard of the covered put before. Is that something we just invented, or is that an actual functional thing? Because I always thought of like selling, and I've never sold puts or calls or any of that stuff. I think a lot of this stuff is crazy. I have a lot of respect for Neithu and the people who like are in the weeds on that stuff. It's just not for me. I'd rather be exposed to only asymmetrical outcomes and never have the blow up risk. But that's why we have Jeff, like people who work in insurance, and they're very, they're very familiar with these things, whereas like I just don't have that sense of comfort. With that being said, to wrap this up here, my understanding of selling puts was always it was cash secured, like what Dan said.
It's cash
meaning,
secured. You're right. Cash secured. Yeah.
Is that that a thing though?
Yeah, that's what I thought.
Covered puts.
You can cover short shares. You can cover shares that are sold short. Sorry, you can sell puts against shares that are sold short.
Interesting. Okay. So you would have to have a cash position if you sold a put,
That's the problem.
Not a collateralized share position.
Yeah, you could like hold the shares and then hold the cash. It's just like the opportunity cost of holding the cash while you're selling the put. Kind of like that's the tough part, I think.
Right.
Yeah, I think that's one of the crucial parts actually is that opportunity cost piece, and perhaps to take it like a couple levels higher than where we're at now. The only reason I think people would enter into a call option or any type of option position is because sorry, the coughs. The only reason I feel like anyone would enter into any of these options positions is because they're speculating with timing specifically, right? Like, why are the three of us and slightly different, strike prices or slightly different expirations, but why have the three of us been in these call options for like over a year now? It's because we're kind of betting on the cyclicality of the Bitcoin cycle, post-halving, interest rates, M2 money supply, all that stuff that we've been talking about. Plus, the FTX event also kind of presented itself as like a bottom in the way that Enron back in the dot-com bubble kind of put in like the low. The fraud event kind of puts the low in. Okay, so all that being said, it's like the only reason why you would enter into these types of things is because you're speculating on the performance that could happen within a certain window of time. So absent that, right? Like absent that like conviction, one's thesis of price over a certain period of time, they should never enter any type of option arrangement, either buying or selling to open. So that I think just, like I said, to take it a few levels higher, the only reason why people should be doing something like this, if they wanted to, again, this is not financial advice, is because they have a speculative idea about the timing. Otherwise, you can just sit in the underlying of your choice, whether it's SPY, Tesla, NVIDIA, MicroStrategy, Bitcoin on cold storage. You can just sit in the underlying and not worry about theta or any of this other stuff that we've talked about. So that's the distinction I just wanted to touch on.
Yeah, it's definitely an advanced it's an advanced strategy for math-minded people that want to be involved and think about and speculate on these things. Certainly not go ahead.
Yeah, you're totally right. And I think the cyclical nature of Bitcoin being so different from what like traditional finance is used to, just the short cycles, that's kind of why I got interested in it in the first place. Like, okay, how can you capitalize on these cycles with sort of a traditional finance, just typical equity? And that's why I think there might be some edge in these calls themselves, because people aren't prepared for such a sharp run up in Bitcoin over the next 18 months, which is something that we kind of believe we can sort of time. Like that's kind of where I come from. It's like, does the Bitcoin price move in the positive direction after halvings with some degree of accuracy? Yes. How do you capitalize on that? Options are a fantastic way. So everything you said, Ryan, I think is like spot on.
Yeah, nailed it. All right, so shall we switch gears? What do we got? What do we got here? Selling calls, or you want to get an MSTY?
Maybe we switch to MSTY and look at the annual returns. And we don't have a ton of data on it. It was created February 22nd of this year. We really have very little data. It's given you these are the distributions, and you would have had an 80% increase in your portfolio if you rolled all the dividends into your MSTY shares going forward, which is pretty much on par with MicroStrategy over the same amount of time. But it's been a time that's been it's been highly sidewards. It's been one of the most sidewards periods in MicroStrategy's year of increasing in price. So I think it's a really good sample for MSTY and doesn't show you how potentially selling covered calls, which is the bulk of their strategy, limits your upside when there's a sharp movement in the positive direction.
Yeah, that's the only downside here, right? Is that MicroStrategy, Bitcoin can move 20% in a day, or if there's an Omega candle or Godzilla candle, right? Coming off the back of our conversation with Samson and Adam, there could be a $10,000 move on the daily, and there will be a $10,000 move on the daily at some point in Bitcoin's history. And there is also the possibility for a $100,000 Bitcoin candle on the daily at some point in Bitcoin's future. Now, if MicroStrategy trades correlated to it, as you mentioned earlier, and there's some correlation to the days where Bitcoin's up, MicroStrategy is also up, there's a probability to miss those up days. And I think, I don't know the exact data on it, but it's something like a very small number of Bitcoin's trading days return a majority. It's like a classic 80-20, right? Like the trading days return 80% of the returns for Bitcoin. And it's probably 90-10. It's probably even more narrow than that. So that while it could be lucrative to generate a yield, it could miss some of the very big up days, certainly. I think the other one that's interesting just recently is this T-Rex group files for a two times long and a 2 times inverse MicroStrategy ETF. Pulled up this article. It says Eric Balkunis said this will be the ghost pepper of ETF hot sauce, which I think is funny. But I would be really cautious with those types of ETFs. I think they could be a little bit of a distraction. A little bit of a tin hat theory that, the whoever is filing for this is using this as some way to pull people's funds out of MicroStrategy spot or options to have a larger ability to manipulate the stock in the derivatives market. So I would be cautious with those because you go ahead, Ryan. Give me the looks. It's a little bit tin hatty, but I don't know. I haven't looked into it at all. I don't know how they're generating 2 times leverage returns. I don't know what strategy they're employing. I would be cautious.
Wouldn't they just be doing like a? Go ahead, Ryan. Go ahead.
Sorry, the classic same timer. I like the first part of the tinfoil hat stuff there, where it was like, how can the brokerage houses, or how can the custodians, so to speak, a la the BlackRock, State Street, Vanguards of the world, how can they monetize this? I think like what their incentive would be to pull people out of MSTR the stock, which collects no fees, and get them into a 2x product or the MSTY stuff, which I can share this chart about total return in a second. But like when people, like what you were saying about, like, so that was like the first half of like the tinfoil hat that I agreed with you on. The second half, in terms of like why they would do it to like manipulate derivative prices, I know a lot of people like to talk about like manipulation, but I just either I don't see it, or it's just such an organic, genuine part of like the market making process that it's just become like normalized to me. I don't know. I don't see it with all the conspiracies. Like, and we can talk about something like GameStop, of course, which there was a smoking gun in early 2021 with over 100% of the shares outstanding being sold short. Smoking gun, 100%, get that. Maybe there was some manipulation involved with options going on from there. But just like generally speaking, Or like that Berkshire thing a couple weeks ago where Berkshire went down like 99% a day. And then the tinfoil hatters were like, "Oh, see, like the stock market's all rigged. Like this is a sign of something worse to come." And I'm just sitting over here like, "Hey, I kind of think markets operate very well. The market makers like do a remarkable job. The exchanges like function smoothly. I think it was just a clear like glitch in the system. It got resolved in a day or so. So." No, I mean, I would just say the incentive is to get people out of like perhaps individual stocks into an ETF product where the provider, the custodian can collect on it.
100%. 100%.
Yeah, go ahead, Dan.
No, I'm in complete agreement. They were looking to spice up MicroStrategy itself by providing you with a yield. You can go on their website. It shows 110% annualized yield based on the last dividend that was paid out. It's a marketing ploy, essentially. It doesn't really guarantee anything in the future, and they take a 1% management fee. It's a fantastic strategy, fantastic marketing ploy.
Yeah, I agree.
I'm in agreement. Oh, and then I was saying, how do they do that 2 times leverage? I don't know. It'd be really interesting to see. Like maybe they're using options. It's the opposite of the MSTR, MSTY. They're taking like a straddle options trade and then somehow like covering the middle loss with spot shares. I don't know. I'd be interested to hear how they did that.
Yeah, and then they've got to make their buck. It's somewhere in between that as well, and maybe it's the expense ratio. And Ryan, my point on potential manipulation is not necessarily like today, but in a potential squeeze scenario, which I think is possible, particularly with this one, and more so than GameStop, of having some sort of frenzy where shares are not available. Maybe it's this epoch, maybe not. It could be in the next decade. I think there is a probability of rehypothecation of spot shares or brokerage houses acting inappropriate with shares, not having the shares that they say they have, or something along the lines of that. And that's something that's just like super opaque. Nobody will ever know, right? Like we can't know. There's no data. Like I can't go see how many people hold MicroStrategy shares in Fidelity and see how many shares that Fidelity holds of MicroStrategy on behalf of the people and see how many shares everybody technically has. And I think that's a really interesting component of the market that is just super opaque. And market makers probably have materially more data than we do to be able to see that type of stuff. And the derivatives market, just the data that's available on open interest, the notional value of those shares, I mean, while they're likely hedged, I don't know. I can't say for certain that there's a 100% probability that they're all hedged perfectly. Like there's room for error, human error.
Yeah.
And there's a dozen market makers, right? Like, how many market makers do you think fundamentally believe in Bitcoin? Right?
I think the skew would be a lot steeper between calls and puts if they believed in Bitcoin.
And I think the way that the premiums have gone have shown that there were some market makers that were potentially naked there in the way that the price has gone and the way the premium's gone in derivative trades. Now, in thinking about all of the market makers being bullish on Bitcoin, I think that, let's just say 50% of them are, which is probably not likely. You still have 50% that could underestimate the potential volatility, thinking that this stock is like a typical tech stock or any other stock. So I'm not saying that it's clearly happening. I'm saying that the probability, again, this is my reinsurance and insurance brain working, is that there's a probability greater than zero that somebody is short, is inappropriately allocated here. That's all I'm saying.
Yeah, and I think there's a lot of messiness, let's call it, that goes on in the dark pools because we only have like limited access to that. And then how dark of a dark pool is it if it's on a website and publicly broadcasted? Like there might be another dark pool behind that no one, it's almost like an off the market, like shares just exchanging hands in equal amounts. It could be something like that. So yeah, just a couple quick things here, and then I can talk about the screen that we have up, and I'm happy to pass it back to Dan or go wherever we're going. But on the leveraged MSTR product, I'm not sure I see like an issue with that, or necessarily that there's like fraudulent activity that goes into creating the leveraged outperformance, because over the past number of years we have a history here of there being like not successful leveraged ETF products per se, but they function exactly as they're designed to function, right? Like if you look at like the triple levered natural gas boil, over the past 5 years, it's down like, 98, 99%. It's been wrecked. But on the intraday and the week to week and the month to month, it performed as expected. The one shining success story of a long-term or a decent term hold with a leveraged product is definitely TQQQ, which it almost like tracked like Tesla from 2010, 2011, whenever it came out, to the first peak of the Nasdaq in 2021. Where Tesla's peak is still at. So I don't think there's necessarily an issue there, because there's been so much history of like leveraged products working. I do think though, to your point, Jeff, about there being, whether it's a $10,000 candle or something like that, and how that would pertain to the underlying price of MicroStrategy, could there be a squeeze, these sorts of things. And this kind of goes back to what we were talking about previously with options, but there is almost this like infinite gamma squeeze available with an underlying that can just keep like ripping higher. Plus it can keep ripping higher through like equity market circuit breakers in an environment where Bitcoin in the background is also moving higher. And then what that does is it creates more and more options contracts at a higher strike than what's already existing on the market, which then allows people to, of course, buy those options. And if they finish in the money, then they can exercise, and then that can kind of keep working its way up alongside of the other factors that we talk about. NASDAQ 100 potential inclusion this year, S&P 500 inclusion hopefully next year, pending a successful transition into FASB Fair Value, which, by the way, it's 4 quarters of positive earnings summed together. Those are the two key words there, summed together, meaning it can all be done in one shot, especially if earnings go from a number that's close to zero to a number that's 300 earnings per share or 400 earnings per share. You get it all in one shot in terms of the S&P 500 inclusion. So I do definitely think we could see that type of explosive price action. Perhaps I'm not fully convinced of the manipulation stuff, and who knows, maybe I could be easily proven wrong on that. But I can pause here and then I can talk about this chart, and we can keep pushing forward.
Yeah, let's do the chart.
That's for me.
Yeah, so what I have here, and I know we're talking about a lot of ideas and passing a lot of things around. Like we were just talking about the 2x levered MSTR ETF. Now I'm going to pivot us slightly into the MSTY. I know Jeff has seen a lot of commentary about this on Twitter. I've seen a lot of commentary about it, like people just asking kind of the general feeler questions, like what is this? Why does it exist? Is this something I should buy? And again, none of this is financial advice. We're just going to give kind of like our perspective, our broad view on this stuff. But yeah, so thinking about MSTY, and what this is it's an ETF that owns a certain amount of the MSTR underlying, and then it's selling covered calls against that position in order to generate a yield, and then that yield is then paid out to the people who own the product. With things like this, I think it's very crucial to look at total return, right? I know briefly talked about my cash book. I'm still doing some research, and I want to put some more files together and put out like a comprehensive, like 20 or 30 slide PowerPoint on that. There's a lot that goes into it, but if you have a need to own cash producing assets, there's a strategic way in which one can do that. And I think the first calculation that people have to look at here is the total return level and compare it against their benchmarks, whether that be the S&P 500 or the NASDAQ or Bitcoin's price itself. And again, I think Dan touched on this. MSTY, very small sample size in terms of data. It hasn't been around that long. It looks like it came out in like February of 2024. As you can see, the number one performer in that period was MicroStrategy, the actual underlying. Surprisingly, number two on that list is MSTY though, and that kind of speaks to the dividend yield, and hopefully I can show that here for a second. We'll drop Bitcoin, we'll go unchanged. So we can see why, MSTY is the number two on that last chart list. Because even though it hasn't kept up price-wise, on a total return basis, when it's yielding this much, that also gets, calculated into the total return, which is just the change in price appreciation or depreciation plus the dividends that can come in. And with this thing, yielding 48% right now, we don't know where that's going to go, but it kind of just speaks to the reason for this outperformance. And let me just finish this thing up. So then the normal or the quote unquote normal benchmarks that you'd have for something like this would be, QQQ, which is the NASDAQ 100, what you get on there in total return, S&P 500, Bitcoin, and again, not total return. Obviously, Bitcoin does not pay a dividend. And then this is my favorite of the high dividend S&P 500 ETFs. And
the
again,
dividend bros are going to yell at you here. The Charles Schwab.
The dividend bros of Twitter. There are a lot of them, and they're like surprisingly out there, like enthusiastically talking about, I got 1% or 2% here and all that stuff. And that's
I bought
fun.
more Starbucks today.
Yeah, no, it's like, hey, that's fun. Maybe it's better fitted for someone who's like 70 or 80 years old. But then again, I'm also here talking about this stuff too, because again, I'm someone who doesn't have a job. I'm technically,
right.
Unemployed.
Yeah.
I'm trying to start a company doing business intelligence and like hedge fund type work. But I have an actual reason to own cash producing assets. So again, people have to, and none of this is financial advice. We're just explaining how like we think through this. People have to think through like what their needs are for literally what they need, whether they can just focus on number go up in terms of capital appreciation, or if they need to yield some cash. And there's a mathematical way of doing that with stuff like this, with risk adjusted returns and a whole other bunch of like metrics that can be used to measure this sort of stuff.
I think growing up as an adult, or like becoming an adult over the last 15 years, that's the hardest part about investing, is thinking through a strategy, right? Like thinking through a strategy, thinking through a thesis, sticking to a strategy, understanding where you're at in your life, thinking about your nest egg and the decisions you make in your life as a risk-return trade-off, not necessarily the investments you make as well. So, I mean, for you, Ryan, you're utilizing a yielding portfolio to allow you to continue to take more risk in the real world. Alternatively, sure. you could go take a stable job that pays the bills and take a high risk position in your portfolio, and both of those are okay, right? Like that's what makes a market, is everybody's got different strategies that they want to employ with their life's direction and what they're going through in their life at that point. I mean, all of us on this call have a huge time horizon. So like if if any of these trades completely fail, we can go get jobs, and we can go be employed and make money to facilitate any future activity that we would want to do. Would it suck? For sure. Like if any of these trades went to zero, it would absolutely suck. But given our time horizon in the trade, and I think most of the people that are participating in Bitcoin are generally at least like Gen X, millennial, some Gen Zers, and they're younger people with longer time horizons that are thinking a lot more about their future and struggling with like the current monetary environment that everybody's dealing with. So yeah, you bring up an interesting point. I mean, there's a product for everybody, and the yielding product is a simple way to almost employ like the NITU trade without having to actively manage and do the covered call strategy while you would generate a yield on it as well. So
yeah, and I think the MSTY has actually been doing like a fantastic job. The dividends that they've been paying out have been like almost better than 1% weekly premiums on MSTR, which like itself would be very difficult to return by simply selling covered calls as like a individual investor. So they've been doing a great job, is my point.
Yeah, there are a lot of products out there. There's going to be a lot of future products as well. But Ryan, I think thinking back to the idea that you brought up a little earlier on me being bullish about securitization of assets, I think that would be an interesting future. And particularly thinking about the CMSTR. And Daniel, I'm not sure if you've heard of this, but there's a CMSTR product. This is it's not available in the US, so don't get too excited. But it's a product that trades directly. It trades 24/7, 365 against Bitcoin. So it's MicroStrategy priced against Bitcoin. So you can trade it back and forth, but you can also hold it in a digital wallet. And for example, if like somebody goes and buys a dinner, you go out with your buddy, or we go out to dinner, and I buy, and you guys can send me CMSTR like as like, hey, here's my portion of dinner, and it's just like you can send pieces or fractions of your stock via a securitized trade. And I think a future like that, where everything is like on chain, and there's transparency in a trading environment on all shares available, and there's data available, and it's backed up fully on chain on some sort of blockchain. And that's an interesting future, because you wouldn't have to worry about bad actors or brokerage houses that may rehypothecate or inappropriate leverage in the derivative markets that market makers are taking. The other potential risks, and all of those are real risks, right? Like all of those are very real risks. And it's something I've been a little bit concerned about in the future, is like a brokerage house potentially failing in any of these circumstances. It's a possibility. It's never happened before, but it's a very real possibility.
That's the main reason I hold Bitcoin in cold storage. I'm in a complete agreement. I hold enough Bitcoin in cold storage where I'm like, yeah, if Bitcoin continues to work, I'll probably be fine for the rest of my life with that. And then the rest is like, yeah.
That's me too. And I think I've talked about this multiple times. Like I've got, enough Bitcoin in cold storage where I feel really comfortable with my life. If everything else fails, I still have Bitcoin, and if Bitcoin fails, then it's like, all right, we're going to turn to something else. We'll figure it out, and my time horizon's long enough. So it's interesting.
And that right there is really the benefit of having a long-term time horizon. And I know not everyone's in a position in their 20s or 30s where they can have this degree of confidence, or even perhaps it's not even confidence. Perhaps it's just like a willingness to fail, right? Like we talked about this earlier with the I think it was that January 2025 options positions where Jeff, people were telling you like, well, yeah, like what if you're like wrong on the trade? It's like, then I'll be wrong on the trade. I hope my body keeps breathing and I wake up the next day. Like there's got to be like a willingness and a tolerance for like being wrong. And of course our tolerance can be very high because we could always exchange, we're still well within our working years. We could exchange even physical labor whether it be construction or something like that, if there was to be like extreme volatility within like, all the corporate companies. So we are very much like privileged in that sense of having the long-term time horizon, but it really doesn't make sense to trade or to try and move in any shorter of a time horizon than that. When you look at all the mega winners of life, right? Microsoft, Amazon, Apple, Nvidia, one of the best stocks in human history. Nvidia, maybe you've heard of it, you know what I mean? But the way of actually capturing the value, and whether you do some like options trades on top of that, that can be like the cherry on top. But the way you would have captured the value of Microsoft would have been to buy it on the IPO and never sell it.
Yeah.
Like that's, there's a saying like some traders make money, most of them don't, like some do, but like only investors get fucking rich. You know what I mean? So like the way to like really maximize the value of asymmetry is going to require 20 or 30 years of time.
Yeah, big horizons. Yeah, I think it was just this week, I think with Microsoft's performance, Steve Ballmer passed Bill Gates as in what is it, like net worth, which is Steve Ballmer's done nothing except hold. Right? He's held his options. What actually does he own the Lakers? Maybe he bought the Lakers. Maybe
Clippers.
The Clippers, right?
Yeah.
Okay, he owns the Clippers. So all right, he's got another investment there. But I know Gates is diversified and jumped into a bunch of other trades as well, right? I think he's like one of the largest landowners in America, and taking a different strategy with other net worth. But I mean, I think the point is true though. It's like your horizon and your ability to hold on to long-term assets.
Yeah, I completely agree. And even also like knowing what not to invest in. Like in the case of Bill Gates, he started diversifying because things were interesting, whatever. But if you're trying to make the buck, like the constant some form of concentration and then obviously long-term holding is very, very important.
And there's a couple like several interesting points here. Number one, insider selling. Okay, there have been times, whether it was like Saylor's recent like options exercising, which of course produced like a document like every day because it was 5,000 shares a day, or if it's some other executive selling. I was kind of bitter when Elon like sold the top and then bought Twitter. I was kind of bitter about that. But the broader point here with insider selling is like even they aren't always right. The reason is Bill Gates would be worth over $1 trillion if he just never sold. You know what I mean? And that was not just him not picking the winners. That was his own winner. It wasn't like us picking MicroStrategy like someone else's stock. That was his own equity that he created. And he started selling it, and he bought a bunch of junk, like bonds. I know like the land and like some other stuff, and like none of it like really yielded anything. But he bought a bunch of junk, and then Microsoft went up by a factor of 100 or 150 or 200 from the point in which he started selling the stock. And then one quick last fun tidbit to wrap this up. Steve Ballmer inherited Microsoft. Don't kill me on the numbers, this is off of my head, but Steve Ballmer inherited Microsoft at a $450 billion market cap. 10 years later, he then passed it to Satya Nadella at $375 billion in market cap. So he lost, $70-80 billion in market cap over like 10 years. And he passed it over to Satya, but he just never sold the stock. And it's just so crazy that his net worth actually edged higher than Bill Gates, who again could be worth in the ballpark of 1.4 to 1.5 trillion today had he never sold his original equity position.
It's crazy to think about. It's like at some point everybody's got a number, right? Like what's it mean to be a trillionaire when you're already worth 3x more than anybody else? It's like, what's the point? And I'm sure that's what he was up against, and probably what Warren Buffett was tripping in his ear about is thinking about like the world and making an impact on the world, and he's like jumped into all these other different ventures with, and I know this is like a topic that not everybody is has a favorable view of, but like carbon capture and like malaria in Africa, and he's taking more of like a different strategy.
Philanthropic.
There you go. That's the word I was looking for. Philanthropic strategy with his holdings. So it's interesting. Everybody's got a different strategy, and everybody's got a different horizon, and you've got to develop your strategy based on your horizon, where you're at, how you're living your life, what you want your life to look like in the future. And at some point, like everybody's got some sort of number, at which point they make a different decision, right? So, yeah. Well, Dan, any other topics you want to go over or review with the audience? I know we've been chatting for almost 2 hours here. It's been good stuff.
I think we can save it for another time. If someone lasted this video, they put in their work. So.
Yeah, I hear you. Yeah, absolutely. Well, Dan, it's been an absolute pleasure having you. Keep doing the great work. Where can people find you? If people are listening on podcasts, where can people find you? How do they find you on Twitter? I think you did recently put out like an article that you started writing or something along the lines of that as well.
Thanks, Jeff. Yeah. My Twitter is Danny @Danny85732. I have a newsletter, but I've been a little spotty on that. I was just practicing using newsletter software, and I have a YouTube channel as well that's linked in my Twitter profile. Less MicroStrategy stuff, so don't get too excited there. Guys, this was awesome. Thank you so much for everything you do, introducing me to this trade in the first place and bringing me on. So I look forward to the next couple months. Hopefully we can have like a victory episode, but I don't know. Maybe that'll be in 20 years.
10,000 will be the first one, the first
10,
mini victory.
$10,000. That was our first episode. $10,000 MicroStrategy. I think that's so. What is that? $177 billion market cap. So that's our target.
All right, I'll block out some time during Christmas next year.
What about Christmas this year? No.
Yeah.
Well, Dan, it's been a pleasure. Thanks for joining us, appreciate it. Ryan, any closing thoughts?
Yeah, just wanted to thank Dan for being here. Like I said, I really meant all that stuff I said at the open. Like, you post very insightful, thoughtful stuff, and I really have an appreciation for that, especially someone who is more of on the electrical engineering, the STEM side of the world, versus the traditional finance background. Not that there's anything wrong with that, but it's nice to get a balance of both of those views. And hey, we still got a ton of content left. We didn't even get into any of my stuff, and there's more stuff on that main slide deck that Dan was sharing. So gotta have him back on to unpack the rest of this stuff. And same thing for Ben. We already gotta have Ben back on. So there will be no shortage of things to talk about on this, on this channel. And I know we're not the most consistent with timing or things of that nature, but we're really doing our best to put out a quality product, and there will be no shortage of things to talk about.
Yeah, and it seems like so many things happen so quickly in this world too. Just like and the stream on Twitter of information is insane. So, yeah, it's been great. Well, appreciate it, Dan. We'll look forward to having you on in future episodes.
Awesome. You guys are the best. Thank you.